Eli Lilly dropping 10 billion on 3 deals is basically a late night Amazon binge.
I call it panic buying. Biopharma blew almost 47 billion in Q1 because they're terrified of empty pipelines.
Terrified? Oh, come on, they're just paying for scale. Look at Brookfield dropping 3.2 billion for Just Group. Boom, 30 billion in pension savings absorbed overnight.
Right, because integrating 700,000 British pensioners happens overnight. Let me show you what is actually hiding in that deal structure. The rundown: 19 deals, $46.8 billion in 1 quarter. Biopharma is completely detached from the reality the rest of the market is living in.
It is an arms race, Maya. Eli Lilly dropping 10 billion across 3 deals alone. They are just buying the pipeline instead of building it. It is the classic build versus buy, and right now, cash is cheap enough for them to just do it.
Wait, no, it is not. Cash is incredibly expensive right now. That is exactly my point. They are paying premium multiples in a high-interest environment because they are terrified of patent cliffs. It is pure desperation, not strategy.
Desperation with a $10 billion checkbook looks exactly like strategy to me. But fine, look at the non-desperate buyers. Legrand just scooped up Keydak in China and TES in Europe. Racks and power systems.
The unsexy side of the AI boom.
Exactly. Everyone wants to buy the gold mine. Legrand is out here buying the guys who make the pickaxes and the headlamps.
It is smart. You do not have to pick the winning AI model if you own the cooling systems keeping the servers from melting. Speaking of keeping things running, Hahn Co is finally offloading K-Car to a KG Group consortium for $830 million.
Used car platforms are such a brutal space right now. Getting nearly $1 billion for it is a massive win for the private equity guys.
The margins in the footnotes of that K-Car deal look incredibly thin, but KG Group clearly thinks they can squeeze some synergy out of it.
Good luck to them. Anyway, moving from used cars to vanity assets, Rip City Rising officially took the majority stake in the Portland Trail Blazers.
Oh, come on.
Hey, sports franchises appreciate. The front office dynamics there are going to be a total soap opera with the new ownership.
I will stick to corporate drama. It has better SEC filings, like Churchill Capital Corp 9.
Are we really still talking about SPACs?
Only when they trip over their own shoelaces. They had to file a post-effective amendment and totally reschedule their extraordinary general meeting for the Plus Automation merger.
An extraordinary delay for an extraordinary general meeting.
Someone in compliance is having a terrible week.
I love a good paperwork disaster. But we should talk about a deal that actually closed, and it is massive.
Brookfield Wealth Solutions, $3.2 billion for Just Group.
30 billion pounds in pension savings just changed hands.
I read the regulatory filings on how they plan to integrate those 700,000 customers, and we need to talk about their math on this one. The big one.
$3.2 billion or 2.4 billion pounds, depending on which side of the ocean you're doing the math.
Brookfield Wealth Solutions just bought themselves 700,000 UK pensioners.
And 30 billion pounds in pension savings. It's a massive play for scale, instant gratification for their global insurance portfolio.
Instant gratification? Nate, it's a UK pension book. That's the opposite of instant gratification. That's decades of actuarial tables and longevity risk.
But look at the AUM bump. They just pushed their global insurance assets to $180 billion. That's the kind of leap you can't get organically. As a former banker, I look at that and my heart skips a beat. You buy the book, you apply Brookfield's yield-generating machine to those assets, and you print money.
You sound like a walking pitch deck. Look at the price tag. $3.2 billion for 700,000 customers. That's roughly $4,500 per customer for annuities.
Which is entirely reasonable when you consider the average pot size.
Is it? I dug into Just Group's latest filings. Their margins on new business have been under pressure for 3 straight quarters. Brookfield is buying scale, sure, but they're buying a heavily regulated mature asset pool, and UK regulators are currently breathing down everyone's necks about capital buffers.
Oh, come on. Brookfield knows how to handle regulators. They practically wrote the playbook on navigating boring, heavy compliance industries. Infrastructure, real estate, now annuities. It's all the same math to them.
It's not the same math. Real estate doesn't live an extra 5 years because of a new heart medication. Longevity risk is a completely different beast. If these 700,000 people live 3 years longer than the models predict, that yield-generating machine of yours breaks down real fast.
Okay, fair point on the heart meds, but they're locking in 30 billion pounds of permanent capital. Permanent capital, Maya. Do you know what private equity firms would do for that kind of sticky money right now?
Pay $3.2 billion for it, apparently.
Exactly, and it's a brilliant move. They're insulating themselves from the fundraising freeze. While everyone else is begging sovereign wealth funds for capital, Brookfield just bought their own massive piggy bank.
I'll admit the structural play is clever. They bypass the retail fundraising grind entirely. I'm just skeptical they can squeeze enough juice out of those UK corporate bonds to justify the premium.
They don't need to squeeze that hard when the asset base is that huge. Volume covers a multitude of sins.
A terrifying investment philosophy.
Hey, it got me through my Wall Street days.
Speaking of volume covering a multitude of sins, Brookfield wasn't the only one writing massive checks this quarter.
No, they were not. We need to talk about what just happened in Biopharma because $46.8 billion across 19 deals is not just a trend. It's a full-blown arms race. Voices. Well, I saw an analyst note this morning calling the Brookfield acquisition of Just Group a, quote, massive play for scale. They are acting like adding 30 billion pounds in pension savings to their arsenal is just a standard bolt-on.
Because it is standard for Brookfield at this point. They just bought a captive piggy bank. $3.2 billion gets you 700,000 customers who literally cannot take their money anywhere else.
You always make pension deals sound so sinister. It bumps their global insurance AUM to 180 billion. That is real scale.
I am not saying it is sinister. I am saying it is incredibly efficient. Why do the hard work of raising a new fund when you can just buy the retirees?
Fair point. Speaking of aggressive buying, the Biopharma commentary is wild today. One watcher called Q1 2026 a historic quarter, pointing directly at Eli Lilly dropping $10 billion across 3 deals.
$46.8 billion total for the quarter across 19 deals. But calling it historic? Oh, come on. It is panic buying.
Panic? Lilly and Gilead are flexing massive balance sheets. That is confidence, Maya. Fierce pipeline competition means the market is healthy and they have the cash to dominate it.
No, fierce pipeline competition means their blockbuster patents are expiring and they are terrified. Look at the footnotes on the premiums they are paying. You do not drop $10 billion in 90 days unless your internal R&D dashboard is flashing red.
Spoken like a true skeptic. I still say it is a power move. But if you want to see actual panic, look at Churchill Capital Corp 9.
Oh, the Plus Automation SPAC merger.
Exactly. They just had to file a post-effective amendment and literally reschedule their extraordinary general meeting. You know exactly what that means in banker translation.
The lawyers found something weird in the couch cushions.
Or the institutional investors are getting cold feet and demanding better terms. I am pulling up their revised SEC filings right now because we need to track exactly what happens when they finally face the music tomorrow. Spill the tea. I'm officially calling a moratorium on SPAC drama. Churchill Capital 9 rescheduling their extraordinary general meeting again?
Hey, someone has to read the post-effective amendments. It's pure comedy. They're trying to force this Plus Automation merger through, and the paperwork is just bleeding desperation.
Churchill 9. We're on the 9th iteration of this thing. It sounds like a bad sci-fi sequel. I honestly thought we left this energy back in 2021.
We did, but the lawyers clearly missed the memo.
Speaking of missing the memo, how about the front office over in Portland?
Oh, the Trailblazers deal. Rip City Rising taking majority control.
Yeah, the press release says this is sure to shake up front office dynamics, which is basically corporate speak for everyone is getting fired.
I mean, probably, but look at the structure.
It's a pure billionaire vanity play, Maya. Buying an NBA team right now is just an expensive ego trip.
No, I completely disagree. You're looking at it like a banker who missed out on the advisory fee. Sports franchises are basically bulletproof media conglomerates now. The local TV rights alone, plus the real estate. Rip City Rising isn't just buying a basketball team, they're buying a monopoly on Portland entertainment.
Okay, fair point, but I still say the general manager's office is getting cleared out by Friday.
Oh, 100%. They should start packing.
Well, if you want to talk about actual bulletproof assets, we need to look at what Brookfield just pulled off in the UK.
$3.2 billion for Just Group. The pension savings numbers on this are staggering. Tomorrow's radar.
Tomorrow morning, I'm watching Churchill Capital. They had to file a post-effective amendment and push back the shareholder meeting for that plus automation merger.
Which is totally normal and not at all a massive red flag.
Oh, come on, it's a paperwork delay. The SEC probably just wanted a comma moved.
Nate, nobody reschedules an EGM because of a comma. You only delay the vote when you don't have the votes. I'm betting we see heavy redemptions.
Fine, but I still think the deal closes. What's on your radar?
The FTC. Biopharma just dropped $46.8 billion across 19 deals in Q1. Eli Lilly alone threw down $10 billion. Regulators are definitely going to start poking around those pipelines tomorrow.
Fair. Though speaking of pipelines, I'm really just waiting to see how Rip City Rising handles the Portland Trailblazers front office now that they officially took majority control.
From SPACs to point guards, that's the range people come here for. We'll catch you tomorrow.